Ever wondered what the stock market is and how it works? Maybe you've heard terms like stocks, shares, or dividends, but it all feels confusing. In this video, we'll break it down step by step so you can understand how the stock market works and why it matters to you. What is the stock market? The stock market is a marketplace where investors buy and sell shares of publicly traded companies. Think of it like a farmer's market, but instead of fruits and veggies, you're trading pieces of businesses. These pieces are called shares. And owning a share means you own a small part of that company. Why do companies sell shares? Companies sell shares to raise money for growth. Imagine you own a coffee shop and want to open more locations. Instead of taking a loan, you sell small pieces of your business, called shares, to investors. In return, investors get a piece of your profits and the potential for the value of their shares to grow as your company succeeds. How does buying and selling work? When you buy a stock, you're purchasing it from another investor, not directly from the company. This happens on a stock exchange, like the New York Stock Exchange, NYSE, or NASDAQ. The price of a stock depends on supply and demand. If lots of people want to buy a stock, its price goes up. If more people want to sell, the price goes down. What are indexes? You've probably heard about the S&P 500 or the Dow Jones. These are indexes that track the performance of groups of stocks. Think of them as scoreboards for the stock market. For example, the S&P 500 tracks the 500 largest publicly traded companies in the US. These indexes help investors see how the market, or specific parts of it, are doing overall. How do you make money in the stock market? There are two main ways to make money in the stock market. The first is through capital gains. This happens when you sell a stock for more than you paid. The second is through dividends, which are payments some companies make to shareholders from their profits. Not all companies pay dividends, but those that do often attract income-focused investors. Risks of investing in stocks. Investing in the stock market comes with risks. Stock prices can go up and down, sometimes very quickly. This is called volatility. There's also the risk of losing money if the company you invest in doesn't perform well. However, by diversifying your investments, spreading your money across different stocks, you can reduce your overall risk. How to get started in the stock market. Getting started is easier than ever. First, open a brokerage account with platforms like Robinhood, Fidelity, or E-Trade. Next, research the stocks or ETFs you're interested in. Finally, start small. Invest only what you can afford to lose and focus on learning as you go. And that's the basics of how the stock market works. Remember, investing takes time and patience, but it's one of the best ways to grow your wealth. If you found this video helpful, give it a thumbs up, subscribe for more finance tips, and let us know in the comments what you'd like to learn next.